I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. He's speaking to us from Colorado. And Rick, congratulations. You are our first guest of the new year.
Well, that's great. Thanks very much for having me on, Jim, and that's. I hope I can kick off the new year with things that'll be of interest to your listeners.
Well, we always want to know what's going to happen in the new year, or are we going to be kept guessing?
Well, I've learned not to pretend that I have a crystal ball. You know, it's pretty much it's an old saying that the market has a way of humbling those who would attempt to predict the future. And this one is 2017 is going to be a difficult year to handicap at the outset, because we've obviously had an epic change politically, and U.S. finally has a government in place that can, at least in theory, get things done. So, just what they do get done is open to speculation right now. Of course, Trump's detractors are only focused on how much of what can get done is going to be obstructed. But just the same, I think that no matter how much opposition there's going to be, Obamacare will be history shortly, and I don't see that as a health care entity or plan. To me, it's just a huge tax that benefited a relatively few. Most of the people added to the Obamacare rolls came by way of Medicaid, so it's really helped a relative handful of people at the huge, huge, huge expense of the American middle class. And that's not just an abstraction for me. I've seen, I have Medicare myself, but my family is they're all on private insurance plans, and my wife has had to switch plans 5 or 6 times in the last few years, simply because the old plans didn't qualify. And of course, like everyone else, the premiums have skyrocketed. So as soon as Obamacare is flushed down the toilet, which is where it belonged to begin with, we will have the largest single tax ever imposed on Americans, lifted from their shoulders. So that's definitely going to be good for business. And even on the trade side of things, Trump's detractors said that he's a protectionist. I don't think so at all. I think he's just a very capable negotiator who's willing to do any trade deal that makes sense for the U.S. So I don't think he's going to bar imports from Mexico and China and other places. He's just going to try to strike better deals. And of course, we should be able to get better deals, because every exporter, every manufacturer in the world is eager to sell into the U.S. market. So I think Trump's a good guy for the job of cutting trade deals that work. So we've got definitely some positives going, but of course there's some considerable negatives too, that come mainly from the tightening that we've seen in interest rates.
Well, the U.S. is the only major industrial country that has promised to bring in more rate hikes.
I don't think that's going to happen. The economy is sort of wobbly, and I think that the Fed was talking about 3 price hikes within the next year. And you'll know I keep saying that real tightening is about as likely as a Martian invasion. I still think that's true. The economy, let's say for purposes of spin control, might be statistically, I'm not even going to say plausibly, but we see the spinmeisters out there seizing on whatever statistics seem to suggest that the economy is strengthening, but I didn't see it at all. We've had, we're still sort of slogging along at 2% GDP growth, and we've had very little growth in real income. There's only just some slight wage pressure right now, but of course that follows almost a decade of very heavy-handed stimulus. So we haven't had much of recovery, and I think it would be very easy for the Fed to kill that recovery if it's not dead already, based on the, about 80 basis point rise in long-term in mortgage rates. So that's going to be that's already in the pipeline. We've had enough of an increase in interest rates that the refi market has absolutely imploded, and it's reached the point in the U.S. where first-time buyers are just about locked out of the market because they're facing the double-barreled shotgun here of rising rates, but also a relatively tight supply of homes that has helped to push the price up. So that's sort of a perfect storm where first-time buyers are concerned. And, how the housing sector goes in 2017 is no small thing.
Do people underestimate the impact real estate has on the economy?
No, I think we're all aware of it. If we're homeowners, buying washing machines and dryers and televisions and the things that go in homes and doing kitchen remodels and things like that, you can see where the home is really your biggest ticket item. You do a kitchen remodel, and all of a sudden you're spending more than you would even on a new car. So housing is absolutely crucial, and even the side of it, the equity side of it, is important because a lot of people pay down their debt, sometimes college tuition and things like that, by borrowing against the equity value in their homes. But as I just mentioned, the refi market is absolutely dead right now, and we would need a combination of significantly lower rates and another surge in home prices before we could launch into another refi cycle.
Would we expect to see quantitative easing under a Trump government?
Well, that certainly goes a long way from the Fed's their quote-unquote story. They're trying to make people think that the economy is robust enough to take a little tightening, but I don't think they're going to abandon that phony story and kind of swing the other way unless we get a very serious decline in the statistical economy.
How do you look at places like Japan and Europe where they either have zero interest rates or negative interest rates? Is that good?
Well, Japan's example has been telling us that once you're in you're in that deflationary black hole, or you're subject to its force, there's no way out of it. And of course, Japan's inability to get out of its protracted deflationary wallow has come even though their export economy has been relatively robust. Japan's great advantage was that even over the years of its deflationary or disinflationary problem, it had a strong global economy to export into. Of course, the U.S. doesn't have that. We've got the Fed as the lender of last resort, but in terms of generating real economic growth, we don't have what Japan does, not by a long shot. We don't have a manufacturing economy that's geared to spiking the U.S. economy. If the whole world depends on us to buy, and it just doesn't work the other way.
President-elect Trump said he's going to put a big tax on GM vehicles built in Mexico, and Ford has announced that they are canceling a $1.6 billion Mexican plant and will instead expand a plant in Michigan by a $700 million boost.
That's particularly interesting to me because I've got a lot of pen pals, and they send me some of the gurus their forecasts, and there's such a spread between the negativists. I think Harry Dent is probably one of the most visible of them right now, and he had a conference in Florida a couple months ago. I went down to that conference, and he made a very persuasive case that the sky is about to fall. Don't try to save yourself. The stock market is going to collapse any day. And another very well-respected forecaster, Armstrong, had his own conference in Florida, and he was sort of matter-of-fact about saying, well, the Dow is going to go to 23,000, and from there a little bit of basing, and it's eventually going to get up to 40,000. So you've got such extremes represented. But one of the interesting things about Armstrong's presentation was that, for one, he predicted that the deflationary cycle is over, and that's a big deal for me because I've been an inveterate deflationist for the last 40 years, or almost 40 years. But also, Armstrong says that we're going to finally see a skew of capital from government to private investment. So, in other words, capital is finally going to start moving into U.S. manufacturing and not just the infrastructure of roads and bridges, but the infrastructure of real production. So when I see some of these things happening, like Ford bringing its production back to the U.S. and GM being admonished about expanding its Mexican operations, that fits what Armstrong is saying exactly. That through presidential jawboning and some of the things that Trump promised and stands for, we're going to see a return of capital to the U.S. And of course, when it goes into the auto sector, we always had a natural advantage there, because we don't have shipping costs. If a car is manufactured in Germany or Japan or wherever, it costs a lot of money to ship it here, and that's why a lot of car manufacturers have located their operations in the U.S. But to the extent that wages have caught up in some of these countries, certainly South Korea, and to some extent Brazil, where they have car manufacturing, they're paying higher wages to make those cars. So the U.S. is now, you could say that we're on the upswing here, that the labor component of our manufacturing is not going to be as significantly against the U.S. as it has been. So we have to distinguish what's happening now. You might say, well, Trump is just kind of cajoling these companies to think American, but an even bigger picture suggests that we may have a resurgence of capital investment in the U.S. And of course, if that's the case, Armstrong's 40,000 figure for the Dow is not sounding terribly far-fetched.
Well, it's interesting that both Mr. Dent and Mr. Armstrong have been on our program before, and it's interesting that they have divergent views, but without those divergent views, we'd be very boring.
Yeah, well, that's you've talked to a couple really interesting guys, and Armstrong, he's got a pretty good following. So does Harry Dent, for that matter. But between the two, it leaves a very big gap, a question as to what really will happen. But I do think that what's possible under Trump is more congruent with the things that Armstrong is predicting than Harry Dent.
Trump says he wants Charles Lighthizer to be his trade representative. He was in the Reagan administration. He's a big critic of China. Is that a good move?
I'm not familiar with the man or what his significant, what kind of policy statements he's made, but I'm assuming that it goes hand in hand with Trump's wanting to cut good deals. He's not out to shut. I think he's I think at heart, deep down, Trump is a conservative in the way that he simply wants to conserve resources. He wants to maximize investment dollars in the U.S., and he wants every dollar to count. So I'm assuming that his pick for trade envoy here is a guy who's committed to doing deals, not with threats of tariffs, but with threats of hey, there's a lot of business to be done in the U.S. if you guys want to play ball with us.
We'll have more with Rick Ackerman right after the break.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Rick Ackerman. Rick, natural gas prices have fallen with a prediction that the U.S. will have perhaps a warmer winter, at least warmer than it is right now.
Well, a couple of things. I live in Colorado, and we're having very cold weather. I think today it's only supposed to get up to, or tomorrow up to 20 degrees or something, and we've had a little snow. And I've never seen natural gas prices fall so hard so far that it actually reduced my monthly heating bill in the winter. We've had natural gas prices over the last couple of days have come down pretty hard. I've been using a target on the March natural gas contract of $3.92, and last week we topped at $3.82, about a dime below that. But since then, especially today, we've had this huge move down. So it feels to me like the move in natural gas is, well, it's not over. The target is still, that 392 target is still viable. But I think the trade right now is a bear trade. So there's obviously, I have a friend whose son works for one of the big petroleum companies, and he qualifies as a real expert on fracking, and he was saying that there's enough natural gas that is recoverable with fracking and this is just under 2 states, Colorado, I think, and North Dakota. There's enough natural gas there to power the U.S. for the next, his estimate was 280 years. So, despite local opposition to fracking, and it's not what I would call groundless. There are problems that are suspected as being caused by fracking, but because all of that supply is there, it will be extracted at some point and in some measure. So, I don't see an energy shortage developing over the next decade, and I think probably an even greater shift than we've had already toward natural gas as an energy source.
Well, British Columbia, too, years ago had a 200-year proven reserve of natural gas, and now, of course, we have newer technologies that apparently every year double your ability to produce oil and gas.
Right. We're a long way from peak oil, You can see how the experts get it wrong, but scarcity has always been less of a problem than a lot of these experts imagine. So every time that somebody says we're going to be tapped out on energy sources, a new supply is discovered, or in the case of fracking, a whole new technology to make vast reserves recoverable. So, and of course, the natural gas source undercuts the argument of coal burning. Trump has certainly literally stoked the fire with talk of reviving coal country, West Virginia, and the coal mines. But with fracking, we have, I guess, in the eyes of the green activists, we're just trading one environmental problem for another. but it's not a bad trade, provided we can find ways to extract natural gas without polluting underground water supplies and without destabilizing the substrata, so that you get sinkholes and who knows, earthquakes. But I think the technology can go at those problems and do it less expensively than making coal burn clean.
What about other commodities like grains going into the summer? Are they expecting more droughts, or will there be decent production and lower prices?
Well, I hope we've come through the worst part of the drought. California is responsible for producing, I can't remember what the percentage is of stuff we buy in the grocery department of our local supermarkets, but I know Northern California has been having its share of rain. That's certainly indicative of that's a change in the weather, and whether or not it spreads to the relatively parched Southern California and to the Southwest is still, it's open to conjecture and prayer.
Well, I think Southern California does get a lot of rain, but it happens all at once. They have to do a better job of capturing it and retaining it, and then using that water instead of letting it just scoot out to the ocean.
Well, sometimes it does seem like it's either mudslides or drought. But I know we get our share of water from the Colorado River here in Colorado, but predictions going out 10, 20 years suggest that if you're at the southern extreme of Colorado River water flow, it's going to dry to a trickle if it hasn't done that already. So here in the Southwest, water is always a big concern. Not so much here in Boulder. It's interesting. We're right on the eastern slope of the Continental Divide, and even in times when we get relatively little rainfall, there's enough snowpack that essentially melts and sends water our way that since I've lived here in 1999, we've never had watering restrictions. But people who are south of here in New Mexico, for one, are always hoping for a break in the weather, but it's been very, very dry.
Well, we've had more than our fair share of snow in the Vancouver area. Our problem is that our reservoirs can't hold enough water for 3 million people over the summer. So we do have watering restrictions. And how much snow do we have? Over 10 feet on the local ski mountains.
Well, that's pretty good. We were going into the Christmas holiday with about 20 inches of snow at the tops of some of the ski resort peaks. And they got just enough snow. The holiday is a very crucial season for Colorado skiing, and we got just enough snow that the Christmas ski season was, I think, reasonably successful. And since then, we've had additional snow, and I think at this point most of the lifts are open in Colorado.
Well, I think we need lifts to the lifts. We have so much snow. Rick, thank you so much for being the first guest of the year on our show.
Well, thank you very much for inviting me on, Jim. Always a pleasure.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. You're listening to HowStreet.com radio. If you have any questions, you can email us at info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.